This is your LMAX Exchange Technical Update for Wednesday, May 17th, 2017. Eurodollar. So if we consider this latest break to fresh 2017 highs above the previous 2017 high at 1020, it confirms a higher low now in place by that recent low at 108.40, which opens the next measured move upside extension towards 112 in the sessions ahead. Again, we had seen a high at 110.20 before the market corrected back down to 108.40. That move was 180 points, and so the breakout above 110.20 projects 180 points to the top side towards that next key objective at 112. We also have this formation of a longer term base that is showing in 2017 off that inverse head and shoulders type formation, which opens gains potentially up to the 114 to 115 area on a medium term basis. At this point, look for any setbacks to be very well supported, with only a breakback below 108.40 to compromise the bullish outlook for euro dollar. Sterling dollar. So cable has done a good job of consolidating above the previous resistance, that range high that had defined the top of the market since basing out by that plus 30-year low in October at 118.40. But the breakout now suggests that the market could be putting in a more meaningful bottom, exposing fresh upside over the medium term towards the next measured move extension at 135. At this point, if we do see setbacks, they're expected to be very well supported into the 125 area, with only a breakdown below 123.60, that low that was seen back on the 10th of April, to compromise the bullish outlook for sterling dollar. Dollar yen. So dollar yen has come back under pressure since the market stalled out into this latest run above 114. The market is still trading within a neutral territory since breaking back above 112, but if the market now establishes a close below 112, it will put the pressure back on the downside and expose a possible retest of that 2017 low just ahead of 108. At this point, it would take a break all the way back above 115.60 to force a bullish shift in the structure. Euro Swiss. So Euro Swiss has failed in its attempt to break above that psychological barrier at 110 thus far, with the pullback now exposing a potential drop back down towards those key range lows down in the 106 area. At this point, it would take the establishment above 110 to force a significant shift in the structure, and until then, the overall pressure does remain on the downside. Aussie dollar. So Aussie has seen a nice correction over the past several sessions, but overall this is a market that is showing signs of topping out, and so any rallies are viewed as corrective in anticipation of the next lower top and bearish continuation down below the recent low that we saw around 73.30 and towards medium-term support at 71.60 from December of 2016. Only back above 76.11, that's the high from the 17th of April, would compromise the bearish outlook. Dollar CAD. So dollar CAD is finally seeing the onset of a correction off that 2017 high just shy of 138. The market was looking for a correction after we saw an intense rally, but at this point setbacks should continue to be very well supported, with a potential higher low now sought out in the 134 area in favor of a continuation of gains beyond 138 and towards 140 further up. Only back below 132.20 compromises the constructive outlook for dollar CAD. Kiwi dollar. So Kiwi has been supported off its recent 2017 low, but here the market continues to show signs of topping out, and so any rallies should be very well capped in anticipation of that fresh downside extension below the recent 2017 low and towards the 65 area further down. At this point, only back above 71 would compromise the bearish outlook for Kiwi dollar. SPX 500. The S&P 500 continues to trade with a highly constructive tone despite the recent setbacks, but the market would need to establish back below 23.22 or 23.20, let's call it, that low that was back on the 27th of March, to really force a significant shift in the structure. Until then, any setbacks that we do see are viewed as short-term corrective ahead of what could be that next major upside extension towards the 24.80 area. Of course, this is a trend that has been quite intense over the past several years, and so a correction and reversal is something that is thought about, but it would need to see a break back below 23.20 to at least at a minimum force the potential conversation of a shift in this structure. Gold. So gold is showing signs of once again putting in a higher low. The market has been putting in higher lows since basing out in 2016. A higher low was seen back in early 2017 around the 1184 area. Then we saw a higher low at 1195. And so this latest pullback off the 2017 high was seen as corrective, with a higher low anticipated above 1195 in favor of a bullish resumption above 1295 and towards that 1375 2016 peak further up. We're seeing this play out right now, possibly with the market now being supported by recent support at 1215, and this is now an anticipated higher low ahead of that bullish continuation. Below 1215 would compromise this outlook, while only back below 1195 would negate and put the pressure back on the downside.